knows this is just a quick little talk about what's happening in the market, what are we seeing going on, and how leveraging our fabulous partnership with Rob and Guaranteed Rate can help everybody close more business and help their buyers stay calm. So tell us what's happening. We had some.
Stay calm, right? That's the name of the game right now. No,
It
I
is,
mean,
isn't it?
it's been an interesting run over the last month in our world. We continue to see lots and lots of activity with most of the offers being multiple offer situations, right? I mean, just about everything that I've done in the last 30 days has been a multiple offer. I can only think of one or two transactions right now that weren't multiple offer situations, so it's still much of that. And, doing a lot of rerunning of numbers for people, doing a lot of outreach to listing agents to, plead our buyer's case to try to assist them in getting the offers accepted, so that I think that's still, much the same that it has been. We've seen interest rates had risen throughout the entire month of February unexpectedly and went up by about 1% between the end of January and the early part of March. And we now have seen in the last couple of days them drop precipitously. Today alone, interest rates lower by 0.25% from where they were on Friday. Friday, they were about 0.25% below what they were on Thursday. And so,
oh my gosh, that's
yeah,
great news.
It's helpful for sure. We're getting back to seeing rates that are at least similar to what we saw there at the end of January, which is one of the best rates that we've really seen since October. So that I think that was helping some buyers, feel better about their decisions. And we were seeing rates that were solidly in the sixes and in some cases in the fives. It just seemed to sound a lot better to buyers than the sixes and sevens, which is what we had been seeing prior to that. So, and what we were seeing up until last week. So that's an interesting phenomenon. It's being brought on by a couple of different things. The primary one is the collapse of the, like I say collapse, the issues associated with Silicon Valley Bank, right? That we all heard about.
I was going to ask how much that's playing. Yeah.
Yeah. So, what that has done in the marketplace to the interest rate market is that a lot of people are now feeling that where there's smoke, there's fire, and that there are some other potential banks that could have some issues, and that it basically is indicative of the fact that the economy is slowing. Also, will likely lead the Federal Reserve to not raise interest rates either as much or at all at their next meeting, whereas everybody was thinking that they were probably going to have to raise them by 50 basis points. The Friday of last week, when that Silicon Valley Bank thing first, kind of came out and started being talked about, same day, the Department of Labor released a report showing that the economy didn't create as many new jobs in February as they forecasted, which that was the main kind of the initiator of the problems that started in early February was that same report. So that was good. So it was just, a combination of a couple of things that have forced rates down quite a bit. And basically about half of what we lost during the month of February, we've already gotten back, which is good. So, we'll see where that goes from here. But, I think that we're likely going to see that as things go on later this year, that we're going to see rates are going to drop. And I'm pleasantly surprised, not for the reasons that it's happening, but I'm pleasantly surprised to see that rates seem to at least now be, off of this upward momentum that they had. We're now pointing in the opposite direction. So hopefully that'll be something we'll see the next couple of weeks.
Yeah, I think, when I was driving in this morning, I listened to CNBC and things. And so they started to talk about, is there a potential for other, I'm remembering the movie It's a Wonderful Life, where you talk about a run on a bank. And surely, we're nowhere near the economic conditions of anything like that, or, whenever the last, crazy market challenges were in the banking business and stuff over the last 20 or 30 years. But I remember that you kind of have to sit back and let the dust settle a little bit too, right? You can't overreact to what's happening right now. And hopefully for these buyers that are starting to work with, they'll benefit from the drop in rates if they have enough time before closing to leverage that, right?
Yeah, I mean, we and a lot of other lenders do also, but we on just about everything that we do, we offer what's called a float down. And so if the rates drop by 0.25%, between the date that they lock in and up until 5 days prior to closing, we will reposition the interest rate into that lower interest rate. We did a lot of those back in but for people that had locked in back in October and November, where we saw rates drop pretty dramatically, pretty quickly into that first week of November. So people that were closing in November and December were able to reposition interest rates into what were considerably lower rates. I had one client actually who locked in, I think it might have been at the absolute peak. And I remember when we did the float down, it reduced the interest rate by 7/8%. For her. Yeah, so it was, we definitely, people that locked in a week ago or a week and a half ago when rates were kind of at the peak, no doubt we would be able to relock them now. It's just a matter of, kind of waiting and seeing, like, does it make sense to, maybe the rates are going to be lower, even lower yet a week from now. And I think that's kind of the way that things are pointing right now. So I'm hesitant to do it quite yet for these folks, but some of them are in play, and we will be doing some rate float downs, no question, moving forward.
Okay, very exciting.
Yep.
Well, I'm
Yeah, it's
really
good.
glad
It's
to
great
hear
for
that.
clients. Great for
Yeah,
clients for sure.
awesome. All right.
Yep. Yep.
What else? Are you having one of the big wins that Jeff LaBelle was telling me about was he had a buyer, agent brought in a buyer, and the buyer went out and started to compare rates, but Jeff was able to win them over and be extremely competitive, and I believe beat the rate, as well as he told me, one of the other deals he's working on is new construction and the great opportunities there to really help the buyers understand
Yep.
what the new construction sales office, they're trying to lure you in with all these things, but in the net, when you look at how that money plays out, you're really paying so much more than you think you are.
Yeah, the new construction is a good one. Jeff and I talked about that transaction,
Hmm.
and I had a similar transaction last week for an agent in a different office where it was a VA loan, and the interest rate that was being provided by the lender uh, was so much higher that basically the way that worked out was that I could offer the same interest rate that the lenders that the builder's lender was offering. They were getting a $10,000 credit, and the sales price on this property was about $800,000.
Hmm.
So if I was to offer the same rate the builder's lender was going to offer them, then I could have provided them a credit that was equal to 1.75% of the loan amount, which was um, about $13,000 or $14,000. And so they ended up deciding not to lock in at the time just because of what was going on Thursday. It was the Thursday that I talked to him, but the bottom line is that we can oftentimes, through the pricing that we're able to offer the client a better overall deal, even if they're getting this quote unquote $10,000 or $5,000 or whatever from the builder for using their lender. Just a lot of it's smoke and mirrors, and with the elevated rates that they're going to charge, we can end up doing either the same rate and then give them a larger credit, which is what I think this person's probably going to do, or we could alternatively offer them a lower rate. The other thing that we have that a lot of the builders people don't have is that we have some extended lock-ins. So we can do lock-ins for out as far as a year. And it's amazing to me how many builder lenders don't offer anything more than like a 60-day lock-in, and
Hmm.
so I don't think it's quite as big of a deal now, given where I think rates are going to head later this year, where it's not like last year where we were clear that rates were going to continue to head higher.
Right.
But if that were to change and somebody's got a house under contract that's going to close in October, then it might be something that they do want to look at to be able to at least put a lock-in in place now, and then still be able to do a float down as they approach the closing date. We
Hmm.
also have our business is competitive as heck, needless to say. And so we've got the ability to contact our pricing area that formulates the rates and publishes what we offer each day to say, look, we have a competitor that's offering something that's slightly better. We need to match this offer in order to keep the client happy, and in order to
Hmm.
retain them as a client. So we have the ability to do that. It's unlike a lot of other businesses, the margins are thin. We set a price each day that's going to be the retail price, but we'd rather take less of a margin and still at least generate some revenue on it than to just let the loan go. So,
Sure.
very often we can improve upon the pricing as long as we have something to utilize as a comparative, estimate, which Jeff had in the example that you gave. So he
Hmm.
was able to send that over and then get the pricing, people to match up with that offer, and we're able to retain the deal, which is great.
Right. Well,
Yep.
that's super exciting to know. I love the fact that how long did you say you could lock in for new construction?
Well,
Six
we can
months?
lock in for up to a year with certain loan
Oh my
products.
gosh, that's amazing.
Yes, yeah,
Yeah,
yep, yep.
that's amazing. Yeah, and just knowing how hard you fight to keep the client and be competitive. I love that too, even though I know you're already very competitive. But just the kind of shining the light on a new construction transaction, I think that's huge to know what
Yeah,
the opportunities are there.
our pricing is very, very competitive. And I'll tell you that maybe 1 out of 5 or 6 transactions that I'm involved in, we get into a back and forth with the client. Most of the
Mhm.
time, I'd say at least half of the time anyway, the clients are comparing more than one lender.
Sure.
And of those folks, 70% of the time, our pricing is going to already be better than what they're getting from somebody else. Maybe even more than that. Maybe it's 80 or 85% of the time. And then a
Mhm.
few times where it's not quite as good, it's not going to be something where it's way off the mark. Understand what's happening behind the scenes here is that mortgage companies, the underlying price that mortgage companies get from the end investor, whether it be Freddie Mac or Fannie Mae or Ginnie Mae or something like that, it's the same rate. So whether it be me or whether it be somebody, whether it's somebody that works for Wells Fargo, as an example, directly, whether it's somebody that works for a Caliber or a First Savings, which are large correspondent lenders like we are, the
Mhm.
underlying price that the company is getting is the same price. It doesn't
Mhm.
matter. Each
Okay.
company has, just like any other business does, has a certain profit model that they use, right? And our profit model is one that is where they're do a lot of volume at a smaller profit margin, but yet you
Mhm.
still run into situations, especially with the market being as competitive as it is in the DC area, where somebody might have a price that's fractionally better than ours. We don't know that. We don't
Mhm.
know that they're, the only way we find out is that the client says, oh, I got something slightly better. We have a mechanism in place to be able to match up with that lender because we don't want somebody going someplace else, basically.
Right.
So, and I want the agents to be aware of the fact that we do offer this. It's something that I think is, a lot of companies can't do it. They're like, hey, this is our price. That's it. Either we're better than the next person or we're not. We will budge on that. And we again, it's because of the Coldwell Banker relationship that exists.
Awesome. Well, we're
Okay.
grateful for that. So we all benefit
We're
from it.
happy for it too. We're happy for it
Yeah.
also. So,
Awesome. All right. Well, was there anything else that you wanted to bring up today? Because I'll make
you
sure to
know,
share this with everybody. And I just so you know, I don't have a regular sales meeting tomorrow. I'm just doing kind of a breakout training on listing concierge marketing stuff. So,
okay.
all right.
Yeah, I think that the this recent happening with with this bank, and what may come behind it is going to be
Hmm.
interesting. I think it merits close watching. We'll be paying close attention as things happen and as that plays out. If it causes additional decreases in the rates or whatever impact it may be on our industry and fallout, we'll keep you guys posted and
Hmm.
continue to keep the information flowing. But I appreciate the support. We're getting a lot of support from the office, and I appreciate what you're doing to support us, Kelly, and I appreciate the agents in the office supporting us as well. We want to help you guys, want to help your clients, and we just want the opportunity, and you guys have given it to us, and I really want to say thank you for that.
Oh, my pleasure. I'm so thrilled to have both you and Jeff working with us. Everybody's so thrilled to have you, everybody in the office, not just me. So we're all got a good partnership building. I love
Yeah,
it.
we're happy to
Yeah.
be there for sure.
Awesome.
We love you got a great group of people there, and I'm having fun getting to know everybody and supporting people and trying to help us all get deals done. Right, that's the name of the game
Yeah.
right now.
Well, definitely. We're gonna have to plan a happy hour sometime soon. So, and
No
keep me
question.
posted about our earlier
No question.
conversation. Yeah, that
No,
would be great.
for sure.
Okay.
And yeah, if you want to end the recording, then I've got a couple more things that I wanted to ask you if we
I
could.
will. Yeah. Hang on. Stop recording. There we go.